Investors and traders, welcome to the channel. Today is 28th of January 2024. I hope everyone is having a great weekend. In this video, we are going to take a look at the key markets in the United States. We'll look at the US bond markets. We will also take a look at some of the ETFs in the bond market. And of course, we'll have a overview of the dollar and some of the key currencies. And then gold, crude oil, natural gas in the energy complex, and we'll take a deeper dive into the S&P 500 cash index and the future markets for the stock indices. As always, this video is for educational purposes only and is not a financial advice. Apologies in advance, this video is likely going to be a little bit longer because we have to cover a lot of things, and also the next week starting from 29th of January 2024, it is actually full of action because of the economic events that are likely to take place in the week. We have FOMC coming Wednesday, and then we have some other key economic news factors also coming out. So actually, I'll go to the forexfactory.com and we'll just have review the key events from a economic news perspective coming out. We'll just quickly have a look at that and then we'll move forward. But before that, let's just quickly view the key markets that we follow. So what we can see is that in the bond complex, the bonds lost a little bit. So the 10-year treasury note was down about just 3 ticks, and the 30-year treasury note was down much more. And if you look at the dollar closed slightly positive in the positive territory, and of course Euro USD was lower. Japanese yen, so this is really interesting because the Japanese yen had a fair amount of movement throughout the week and only closed slightly, very slightly, in the negative territory, which means the Japanese yen was very slightly stronger than the USD. And the British pound actually, just pretty much sideways. And if you look at the gold lost about $12 for the week, and silver has been stronger than the gold. It was about 0.71 percentage points higher. If you look at the energy markets, this is where we were discussing during the week that the crude oil turning bullish. It gained 4.76 points, or this is basically barrels per barrel, dollars per barrel, and 6.5 percentage points. And the natural gas was also stronger with 7.66% gained for the week. If we look at the stock indices, we have all in the positive territory, with the S&P 500 being the stronger one. Interesting one is to note it's stronger than the NQs, which had actually been leading, and the clear winner is the Russell 2000, which is up 1.72%. Okay, so now with that out of the way, let me actually quickly go to forexfactory.com. Just typing that in, and we'll just take a look at the calendar. Okay, and here we go. And this is what we are going to take a look at the next week. So nothing much happening on Monday. Tuesday in the dollars, we have JOLTS and the consumer confidence coming out. On Wednesday, of course, we have the Federal Reserve funds and FOMC statement coming out. Then if we look at Thursday, we have the unemployment claims. We have some preliminary non-farm productivity as well, and ISM manufacturing figures. And then we have the non-farm payrolls come out. So quite a lot of activity taking place next week. So next week is going to be a big roller coaster event because of so many economic data coming out. Okay, now let's dive deep into the bond futures. So here I will actually quickly move to the daily chart for the long bond futures, and this is the pattern that we had been actually watching. And the price is holding the 38.2% Fibonacci retracement, which is good for the bonds on the long side. and when the price of the bonds move higher, then the yield comes lower, and the 38.2% retracement is actually around 118.28 seconds. Maybe around the FOMC there is some sort of knee-jerk reaction. We might actually touch the exact levels. Some of the times these levels are pretty precise, so we'll have to wait and see. And on the weekly chart, just a bit of a retracement around here, but you can see it's been a big bear market. If we look at the 10-year treasury note, here we go, and what we are looking at is basically similar to what we have seen on the 30-year long bond futures. And from the 61.8% Fibonacci retracement, just gone sideways to a little bit lower, but again, last week was an inside week, and a lot of activity happening next week, and we'll see how the bonds will perform. Now, those of you guys who actually do not participate in the futures market, but want to be or are interested in the bonds, they can have a look at the ETF TLT, and you can see it's just retraced right to the 38.2% Fibonacci retracement. It's just gone sideways, but still a bear trend closing for last week. So we'll just have to wait and see if we get a bull bar, and if it's able to take out these highs, then that's going to be a pretty positive sign, and maybe it would mean that we are starting another leg higher ABCD, which could in fact see these highs being challenged. Okay, now another ETF that I want to have a quick look at. This is the liquid. This is the iShares investment grade corporate bonds. Let me actually move on to the daily chart. This is what I was actually looking, and this is one of those ETFs which the Federal Reserve was actually buying during the pandemic. So they were buying the investment grade corporate bonds, something which the Federal Reserve did to basically help the economy, which was going into a dire situation at the moment. And the key points that I wanted to bring to your attention was, if you look at this low which came here, we can see it came in 21st of October 2022, and 13th of October 2022 was when the stock market actually bottomed. We'll have a look at that on the SPX chart actually. And then more recently, 23rd of October 2023, that's when we have seen another leg higher in the stock market. So what I'm trying to say is that because this is a corporate investment grade bonds, and there is not a direct correlation, but as long as these bonds are getting more stable, that's also having a positive impact on the stock market, because what it means is that those corporations which could be a little bit on their balance sheet might not be that strong, but they might be actually getting bought, indicated by this ETF LQD liquid. Now let's also take a look at the HYG. This is the ETF for the high yield corporate bonds. So these are typically not the investment grades. These are companies who might not have very strong balance sheets, but they offer their bonds at very attractive coupon rates to attract the investors. And of course, this is the corporate bonds. So here what we can see is that similar action to the liquid. So a low coming in 13th of October 2022, and then another low 23rd of October, but it made a higher low. So this is something to be made note of. And then what it has done so far is just in a very long range, and if it's able to break out of the range to the upside, begin to take these swing highs out, in my opinion, that should also have a positive impact on the stock market as well. But at the moment, the market is just range bound and testing top of the range, in my opinion. Okay, now let's go and have a look at the dollar. So this is the daily chart of dollar. Dollar just going nowhere, just sideways action. And of course, we have a key economic data coming out next week, so we should see something substantial happen in the currency markets as well, in my opinion. So we'll see a whether dollar is gonna break out of this range. The chances are it might actually continue its move higher and test this 104 level, where we also have this 20-week moving average. So here, just dollar is sideways, but it looks like it is actually getting stronger. So again, this is what we're looking at. 104 level is most likely. I will just take a look at the USD JPY, and here we go. This is the USD JPY weekly chart. We can see it has had some fantastic weeks here, a lot of strength in the dollar versus the yen, and now just consolidating last week, and we'll wait and see whether it's just gonna break out of it or retrace lower. Otherwise, what it means is that if the Japanese yen is going to strengthen, it did because of the data which came out last week with regards to the non-core core PCE, excuse me. We did see yen actually strengthen, but it just gave back, and this is how the week closed. So very key to look at the USD JPY pair, in my opinion. Quickly, we'll take a look at the gold. This is the weekly chart of gold market. It is the COMEX gold. It's not the spot market. What we are seeing is basically a sideways action in this market. I believe the dollar is having an impact on this market, but one of the things to note is, which actually dollar being pretty strong or getting stronger, this market has held a fair amount, but on a daily chart it's still possible to come and reach this 1983 level, taking out these lows below that. 1937 is a very key level. So really not much action on a daily chart for this, just really range bound. Shorter term day traders might be able to take advantage of it, but these are the kind of conditions in which one is better off staying out of this market, in my opinion. Again, not a financial advice, and just range bound. So again, next week being a key week from an economic data perspective, we might see some activity in this market as well. Crude oil. All right, there we go. So crude oil, this is daily chart of the crude oil, and what we were watching for was this 77.66 level. That's it closed higher. So in my opinion, it has taken out this level. Now the next one is 79.76, the highs from here. And it's also getting stronger from momentum perspective as well, but right here right now is slightly below. We have the 200-day moving average as well. So from momentum perspective, it's also improving. So it looks like there is strength coming in this crude oil market. And if we look at the weekly chart, we can see that it has formed this kind of a rotating bottom around the 200-week moving average. Now it's gonna go and test that 79.66 level. So again, keep an eye on this market. Crude oil is bullish in my opinion now. Natural gas, I think we'll just skip that chart for now, and we'll just go and focus on the key US stock indices. Okay, so let's start with DJI. In fact, I'm going to actually move down to the daily chart. So let's take a look at the Dow Jones Industrial. This is the cash chart, the daily chart. And here, one of the things that I wanted to bring to your attention is this. So we're using this chart for our timing perspective. As you know, I've mentioned that time is something which is more elusive, but we were working to cover a cycle, which we think is working in this market. Dow Jones, other markets might have slightly few days here and there, and that's about 54 trading days. And what we have seen is that 54 trading days, if we just add this to this low, which was the most recent low prior to forming another low, to this 27th of October 2023, we get 17th of January 2024, and that's where we have seen a low come in the market. So I'm not going to go into the details of this. Please watch a previous video in which I explain. It's basically if we begin to take count the trading days from a low to another low, and then we kind of take a mean. So I took a harmonic mean, and it came down to around 54 trading bars. So that's how I worked it out. Okay, so if we add another 54 trading days to this, what we get is, sorry, this is, here we go. think it's one. Let me actually move it one here. Okay. So if we do this, we get a date of 4th of April. And one of the other things that we're also looking at this chart is some timing cycles coming in from Fibonacci time extensions. One of the dates to take a note, which we are watching for, is 27th of February. So that's where we have a 38.2% extension come in, followed by 1.618, which comes around the 2nd of April 2024. And if we look at the 54-day bar, then it is also coming very close to that. So we have a confluence of two things coming around the 2nd of April to around to 4th of April, so something we are going to pay attention to in terms of the days. Now, these are cycles, they contract and expand by a couple of days in my opinion, so we'll have to add two trading days on the either side, plus or minus, to these dates. And the one where we're getting a confluence of two things from a low to low perspective, perhaps some sort of a low might come in around here on the 4th of April's time frame. Okay, let's take a look at the SPX. So in SPX, on the daily chart, we have this pattern completed, 49.08, 49.11, and the market is just trading sideways. It's just not gone, really moved out of this range at the moment. So here, what I'm trying to suggest here is, if you look at this move from October of 2022, we have had these ABCDs here, and we have had some corrections in these as well, because the markets do not move in a straight line. So if there is going to be a pullback, because some of these markets are completing some pattern formations, we'll just try to have a look at what sort of pullbacks have taken place in these ABCD cycles. So if we just take a look at this one was about 9.17, roughly speaking, because let me try to make it more precise here. So here we go. Yeah, 9.18%. And I don't know exactly where the top is because it's not confirmed, but we are just trying to build some sort of hypothesis by looking at how what kind of pullbacks have taken place in this bull market move so far, and that just brings us to around yeah, so 45.20, so a few hundred points below where we are right now. And also this one is a little bit below the 38.2% Fibonacci retracement, which comes 56.05. So that is something to actually also take in mind. And let's see if there is some expansion levels around here. So if I do some expansion, this is the only kind of swing that I could yeah, so we also get 1.618 expansion of this swing, which comes around here as well, so something to pay attention to. Now another thing to take a look at is this this swing here. Excuse me, I should have drawn it the other way because that makes more sense. So let's grab this price range tool, and we take this high, take this low. So this is about 10%, so it's a little bit more. And if we take this, this is about 384 points down from where we are right now, and this top is not confirmed. It's just we are building up a hypothesis, just like in some other methodologies. There is an alternative count, so we are just taking we are just trying to come up with a hypothesis. If there was a pullback, what kind of pullback we can expect. And it comes right down to 61.8% Fibonacci retracement of this CD leg. And if we just take the entire market where it started from, and here, let me bring in 38.2% retracement. Okay, so that also comes nearby. Now I took this low, not the exact low here, and the reason is that because it's a really strong bar, but it could have been just, you know, a really flush down around here. Maybe even one trade could have done that. Um, and here there was a strong day down, but the market rejected lower price. So I've actually taken this as kind of a, you know, an average kind of a region. If you look at some prior bars, this is the reason I took that, and we get a Fibonacci retracement coming close by as well. And if we take from this point and we bring it here, and I don't know, it's gonna be, yeah, 50% is actually a little bit lower. So yeah, so there is a possibility if we are to expect this kind of a BC leg, then it gets around here, 45.40. And if we were to expect this bigger one, this BC leg around here, then it'll just bring it down to the 61.8% Fibonacci retracement of CD and 38.2% retracement of this entire move, if that is something that were to happen. And at this moment, there is no confirmation. We have some sort of a top. What we do have is some patterns being completed. So if we look at this daily chart on the weekly pattern formation, we have 49.18. But if you look at this this remarkable trend line here, 2 times, 3 times, 1 time, 2 times, 3 times the market touched this, and boom, off it went to the upside. So in my opinion, if there is going to be a pullback, eventually there is going to be pullback. To what extent we can expect a pullback? So this is the kind of analysis we were trying to do. Let's take a look at the NQs, but actually before that, I want to take a look at XLK, which is the ETF. This is the Spider Select Sector Fund ETF for technologies, something I wanted to cover in my video for the technology stocks, which I did yesterday. But I think I forgot to include this, so I just wanted to bring this one here. And this is the weekly chart. What we are looking at is black one is the big ABCD, and it completes around 222. And then we have several ABCD. These were of the corrective nature. Not all of them were perfect, but some of them were really close. And look at this. We have this pattern formation around here where it formed its bottom 1.272 of this BC swing in orange. We were expecting a little bit lower price. But price came close enough, not really getting to the 61.8% Fibonacci retracement, but that happens. And here it was another retracement, and just off it went. So here we have some other this purple ETF completing a little bit higher, and then this red one, the smaller segment, it is completing around the level of 217. So here in this region of 216 to 222, and maybe even a little bit higher, is the region where a number of these patterns are actually completing. So it's something we need to pay attention to. But where the price is right now, it hasn't really completed this. It's in between the 1.272 expansion and 1.618 expansion. So what it means is that there's a possibility that we are likely to get to this level of 216 at least to the upside. And a number of tech firms are actually reporting their earnings next week, so it's really a lot of fireworks, a lot of roller coaster week next week, because from economic perspective, economic data, news perspective, and also the earnings as well. So a really key week coming up next week. So this is something to keep in mind. Okay, so let's move to the NQs here. So here, shorter term, we have reached this target of 17,700, roughly speaking, and that's where the market has actually pulled back from, which is more visible on the daily chart. We'll just have a quick look. Further to the upside, we have the 1.272 expansion coming at 1,800, 18,570 level. But if we look at the weekly chart, the daily chart, what we can see is around here, the 17,700. We also completed smaller ABCD. and for the last couple of trading days the market has just pulled back a little bit. So till we get a lot of in terms of the FOMC results coming out Wednesday, the next couple of trading days might just be trading ranges, not much happening to the upside or downside, and it's really around Wednesday, Thursday, and and then we have the non-farm payroll, and really some earnings coming out from key companies. We could see a movement, but just from a pattern perspective, it has broken above what was our target on the daily chart, 17,250. Shorter term, the expansion of this and ABCD smaller term pattern is also met. We have a higher level on the weekly chart. Maybe that's going to be the next target, but we'll just keep on watching this the daily price action to get more clues for this index. Quickly moving to the Dow Jones Industrial. So this is Dow Jones Industrial daily chart. Here we have also this big ABCD completed. What we are seeing is that this index is actually getting stronger. It never really generated any signal for change in trend, although it completed this pattern, because it never really closed below this level of 37,300 or 37,400 roughly speaking, but it's getting a little bit stronger. Look, it's above these levels, and from momentum perspective, fantastic, pretty strong. The price is above the 220-day moving averages. Look, where the 200 moving average is a fair amount of gap in that. And then on the weekly chart, here we go. Yeah, we can see the same completed pattern around here, but the market, it's pretty strong. The index is pretty strong. So maybe it could be because the Goldman Sachs, for example, JP Morgan, which are part of it, and also IBM came up with fantastic earnings, and there was a big jump in its price. That might have had an impact because it's price weighted index. And maybe if there's going to be earnings from Apple, for example, if something is really fantastic, we might see a little bit of higher price. But we are watching this really carefully around this pattern formations, but it's stronger. And if this pattern is broken, that's going to be really good for the markets. But we are just really carefully watching this. Now let's take a look at the Russell 2000. First, we'll take a look at the Russell 2000 on the daily chart. Here we go. So on the daily chart, one of the things that we are making a note of is that here from the 38.2% Fibonacci retracement of this swing high to low, it's finding a fair amount of resistance thus far. But if it is able to close above this 220, then this would have failed, and it would be a very good or bullish scenario, because we could have the A, B, C, D moving to the upside. However, if the price is actually not able to take the 38.2% Fibonacci resistance out to the upside and begins to close below this low of this bar around 1956, and the chances are it's actually going to go and either test this breakout region. So you see this gap here between 1910 and 1903. So that could become a target, and moving below that, this to right to the 61% Fibonacci retracement, where we have this potential ABCD. And what it means is really that's just moving back into the middle of its trading range, which I'll show you on the weekly chart. And from here, if it begins to turn to the upside, that's going to be, in my opinion, bullish as well, because that means that it's starting A, B, C, D, perhaps the upside. And if it does that from this 38.2% retracement level, that's even stronger. So on the weekly chart, what we are seeing is here is just in a really long trading range, and here it has just, what it has done is just try to break above it, move back into the range. 50% is a little bit lower. That's where we have the completion of those patterns as well. And if it keeps on finding strength and starts a bullish move to the upside from 38.2% Fibonacci retracement, we could have A, B, C, D, and finally it breaks out of this tighter range. Also, one of the charts, one of the videos that I did, I'll put a link to this video towards the end of this video, is the US banking stocks, and we took a look at the KRE index. It's an ETF. That's for the small banking stocks which are part of it. and it's really at a very key pattern formation. We're an ABCD, we're a 38.2% Fibonacci retracement. If it is able to break out of that to the upside, that's really going to help the small caps, because a lot of these small caps get funding from the smaller banks. And if those banks are improving, the price action show that in the index those banks price action is improving in that index. In my opinion, that's also likely to help the small caps. So this is what we are watching here. Now, last but not the least, I'll give you the standard deviation levels for the next week. So these are the standard deviation levels, what we are expecting next week. So about 90 points movement from the close, which is last Friday's close, up or down. 322 in the Nasdaq 100, 700 points in the Dow Jones futures, and about 36 points, 36 and a half points in the Russell 2000. So 90 points in the S&P 500 E-mini futures, and these are the -1 standard deviations to the downside, -2 standard deviations, +1 standard deviation, +2 standard deviations. So if the market, as long as the market is just within the -1 and -2 standard deviations, that's pretty normal. Once it begins to break below the 2 standard deviation, that's where the chances of that thing happening, it's like going beyond 2 sigma. In here, the something similar for the +1 +2 standard deviation, excuse me. So that's how we look at these standard deviations. These are for the weekly, and for a week like next week, which is coming up, the chances for some of these standard deviation to get hit is pretty high in my opinion. So thank you very much for watching the video. I do apologize, a little bit longer video, and I hope everyone is having a fantastic weekend, and I wish you good luck and good trading, and speak to you guys soon. Enjoy.